So the thing I want to look at is just recap on that Aussie New Zealand dollar sell bias that we had from yesterday's session. Now, what we were looking at was a pullback to this broken trend line, the S1 pivot point, and then looking for continuation lower in the Asian session. So we saw this drop lower. There was a move back up to that area initially, selling off. Then we were looking for a retest test to that area in the Asian session. Now this is made a little bit more tricky because of the latest tariff news. We'll come on to that in a minute. If any entries from there could be moved to break even, and I'll tell you why break even. Because the Australian dollar, if you look at the latest news, is that the Court of International Trade has blocked Trump's Liberation Day tariffs. Said that he exceeded his authority to use those tariffs, and that has meant we've seen strong risk on trading. Now the Australian dollar tends to benefit from very positive global risk sentiment, and so you're seeing a divergence in the Aussie and the New Zealand dollar, as the Aussie dollar has greater gains than the New Zealand dollar when markets are really bullish on the global economy. Now this is a snap reaction to the prospect that Trump's tariffs may be illegal and they may be all unwound. Now hold on here, and the reason we've got to hold on, there's some very smart analysts, Goldman Sachs, MUFG, yeah, exactly, Carl.
So we have around 10 minutes now to the bottom of.
It's not only that he won't care, but that's being said, which you're right, Carl. It's what's being said is he has ways of getting around it, and I think there's 3, 4, 5 potential different ways. So watch out for this to unwind in the session. So what means for the Aussie New Zealand dollar potential is that could be moved to break even and just underneath swing points on the 15-minute chart. Okay, so that Aussie New Zealand dollar sell bias came in nicely, and we had that move up in the Asia session and it pulled back. And this was all based on the AUDNZD, who cut interest rates but with one dissenter, and that one dissenter was not expected, and the trade revisions for the official cash rate were revised a little bit down from the last interest rate, from 3.1% to 2.9%, but not as far as the 2.75% that was expected. So on balance, it was seen as a more hawkish decision, a hawkish cut, as it were, and that sent the Aussie New Zealand dollar lower, and we saw that drop in yields as well. So that's what's going on there.